Time now for the currency report. We need to take a look at the euro. Big day for the European Central Bank. They decided to cut rates, relaunch their buying program. Euro plunged and now is whipsawed back into positive territory. I could search for an explanation, but better yet, Adam Button, Chief Currency Analyst at Forex Live, joins us now to weigh in on all this action. And let's start right there. The European Central Bank digging deep.
Well, it is. It was one of those decisions where there were a lot of moving parts in it. There was a rate cut, there's QE, there's tiering for banks, and you have to weigh right now the lower rate differentials against what it might do for growth and confidence in the Eurozone. And initially, obviously, rates are lower, and that's kind of the mechanical response in the market. And you saw the euro sell off, and then you started to see a little bit of buying saying, listen, things are cheap in Europe. And I think that's really telling about central banking into the future, is that these rate differentials matter less in the currency market, and it's more about who can inspire growth or who's gotten to extraordinarily cheap levels.
And that's the big question, inspiring growth. Money was already cheap. It was negative rates. They just went further negative in the European Central Bank. The bond buying resumes, but the big question is, does that get business? Does that get people confident enough to spend and to invest?
Right. It's the two things there. I don't think money is a problem really in any business, the cost of money right now. It's so cheap everywhere. You have to be able to inspire some kind of growth. So whether it's confidence in the central bank or confidence in the government, and I think that Draghi might find, or that Lagarde after him might find, by drawing a line in the sand and saying, governments, it's your time to step up and do something here, that you're going to have a much bigger effect. And you already see the market reacting much more to those headlines than central banks.
And you don't even have to say Germany to know that they're really talking about Germany. If governments have to step up with their own brand of stimulus, it's got to be Germany, the powerhouse.
It absolutely is. I mean, they hold the purse strings for the rest of the zone too, and them in France they very often work together. And they really made an example out of Italy last year for going a couple ticks too high on its budget deficit, and the timing of that was very poor given the backdrop now. So they're going to have to move on that. But I think there are some structural things as well that Europe just can't solve, politically, but also demographically, and just the way the world's changing towards technology.
Now, Donald Trump was watching these moves from the European Central Bank this morning, and basically he used that as another occasion to go after his own central bank, the U.S. Federal Reserve, and basically accusing the ECB of trying to make the euro cheap.
Oh, well, it's like a currency trader flopping around thinking it was going lower, and then it snaps back higher on the day. There's the perception and the reality, and the reality is that the European Central Bank, is trying to stimulate inflation, stimulate growth. It's terrible. Donald Trump would never trade his economy for really any economy within Europe. But the perception begins to matter at some point, and if politicians believe, like Donald Trump does, that you're in a currency war, well, then they're going to get into a currency war. And the uncertainty is very high with how politicians might respond. And, that is coming down the road, whether it's this year or 5 years from now, we will be in a currency war.
Next week, we're going to hear from the Fed. Donald Trump has been on their case, as we said. Yesterday, what was it? Boneheads. I think it was boneheads for not going to zero or lower. I mean, can you make a case in the United States for borrowing costs below zero right now for the Fed?
The Fed has worked so hard to get rates up. They took them off the floor and got them up here, and now they're going to expend all their ammunition on this, which is an economy that's still pretty good. Eventually you're getting to the point where it's bad and you have no fiscal space and you have no monetary space. So for now, it's fine. There's no inflation in the world. We've been saying this forever. There aren't a lot of risks around that, but the risks are down the road when you need to cut. It's just not going to be there, and you're not going to be able to inspire confidence. So, they're going to cut 25 basis points. Powell hasn't shown that he's able to draw a line in the sand and say, listen, this is enough. And he's scared of the market in that sense. He's timid that way. And the market's just going to continue to bully him into rate cuts. So October's 50-50 right now. That's what's to watch next week. And I don't think he's going to give much of a signal, and the market is just going to take with that and price in more cuts. And away we go.
Now, if we take it back home to Canada, our view of where the Bank of Canada will be just a couple of weeks and a couple of months from now has changed pretty dramatically. I'm pulling this up now. For the October 30th meeting, right now the market is pricing in a 14% chance of a cut. That was a very firm bet only about 2 weeks ago that they would indeed cut at that meeting.
Yeah, and it shows that Bank of Canada has this reputation as a bit of a wild card, and we haven't heard anything from them since to lean against that. One indication in the speech after the Bank of Canada decision was that they'll let the U.S. catch up before they move. Bank of Canada, I don't think wants to be higher than the U.S., but they think will stay on the sidelines until the U.S. catches up. So that really leaves them sidelined through the rest of the year. And of course, now acting around the election might be perceived as political, so that's another reason to hold.
How does this play out for the Canadian dollar then, all of this global central bank drama?
Yeah, it's good. I think Canada's a strong economy. It's well diversified. Housing's coming back. I mean, manufacturing's slumping everywhere, so it's no different. Resources that's kind of the ebb and flow in the Canadian dollar right now. And I think we're starting to tune into the election and say, listen, are we going to have a government that's going to invest in resources or that's going to block investment? And that's really the way to look at it.
We can't have a conversation without mentioning Brexit and the pound. It just keeps ratcheting up there.
Yeah, I think the pound's come back nicely now. We've said forever that there will not be a no-deal Brexit. It's unthinkable in a parliamentary system, and Parliament asserted itself last week, and we'll continue to do that. So, we have an election that's going to happen in the UK. Brexit will get extended, and we'll sort it out afterwards. And the outcome of that is really hard to find a government that will take the UK out with a no-deal Brexit. And I see all kinds of upside if somehow we can get a deal, because this is really Boris Johnson's only chance. And there's some chatter that he is bending a little bit. There might be something they can do on the Irish border and get it across the finish line. From there, you have pretty significant upside in the pound.
Always good to have you here, Adam. Thanks for your insight.
Thanks, Greg.
Adam Button's the chief currency analyst at Forex Live.